Welcome back to Talk Tickers. If you're tuning in today, you're probably looking for the signal in all this market static.
Absolutely.
Because you're an experienced investor, or at least you aspire to be one, and you know that the headlines out there are usually just noise.
Yeah, just algorithmic triggers, basically.
Exactly. So we are here to strip away that fluff, ignore the corporate speak entirely, and get you straight to the alpha.
And we have a massive one today.
We really do. Today, we are turning our attention to a company that has been, arguably one of the most fascinating but somewhat under the radar stories in the entire biotech sector.
Right.
We are doing a deep dive on United Therapeutics. Ticker symbol is UTHR.
It is a wild story. And frankly, yesterday was just a massive vindication for the bulls.
Oh, for sure.
The ones who have stuck with this name through some really choppy waters over the last couple of years. We are breaking down the Q4 and full year 2025 update that just dropped yesterday.
Yesterday being February 25th, 2026.
Right. And if you looked at your screens this morning, you saw something that, it just doesn't happen every day with a matured large-cap biotech company.
No, it doesn't. Let's talk about that price action immediately, because I think that sets the stage for everything we are about to unpack today.
It totally frames the narrative.
Because the market absolutely loved this call. We saw the stock rip up 13.03% in a single session.
Huge move.
It closed at exactly $535.10. And this wasn't some low-volume pre-market weirdness either.
No, not at all.
We saw over 1 million shares trade hands.
Yeah, that is high participation. That is real conviction.
Institutions stepping in.
Exactly. Institutions stepping in and basically saying, we want this, we are buying this story. And it's conviction, especially when you look at the headline numbers.
Right, because on the surface, it looked weird.
It was a total contradiction. You had a revenue miss. The top line actually came in under what the street was modeling.
Which usually is a death sentence in this tape.
It is. In this market environment where algorithms just punish any deviation from the consensus, you miss the top line, you get punished, you see a 5% haircut instantly.
But here the stock soared.
It ripped. And that tells you that investors are looking past the immediate quarterly lumpiness. They are buying the narrative.
They are buying the future profitability.
Profitability and this transformational pipeline that management finally opened up about on the call.
Exactly. It is a classic case of the narrative just completely overpowering the spreadsheet for a single quarter.
Yeah.
So here is our roadmap for this deep dive. We are going to hit those headline numbers first.
The beat versus the miss.
Right. And explain exactly why the market shrugged off that revenue dip, because we need to understand the mechanics of that.
It's crucial.
Then we are going to get into the really juicy stuff. We are going to dissect the category killer product reveals that management dropped.
Category killer was their vibe for sure.
They literally used the phrase unsheathed, like they were pulling a sword out of a stone.
It was very theatrical.
Very theatrical, but the substance actually backs it up, which we will get into.
Oh yeah, justified theatrics.
And then we have to look at the catalyst calendar.
Immediate catalyst.
Right, we are talking about major data readouts happening literally next week and next month.
This isn't one of those wait 3 years for phase 2 data biotech stories.
No.
This is a wait 3 days story. The clock is ticking right now as we speak.
It is. And of course, we are going to wrap up with our This Is Not Financial Advice segment,
where we structure a completely wild trade.
Based on what we are calling the super prostacyclin thesis. But let's start with the results snapshot. Walk us through those numbers. What actually happened yesterday that caused a 13% repricing?
So let's look at the bottom line first, because this is where the real fireworks were. GAAP diluted EPS.
Earnings per share.
Right. Earnings per share came in at $7.70.
Okay.
Now, to put that in context, the street consensus, what all the analysts were modeling in their spreadsheets all quarter, was sitting at roughly $6.78.
So they beat by nearly $1.
Nearly a full dollar beat. Specifically, that is a 13.6% beat on earnings.
That is massive. I mean, that isn't some accounting rounding error.
No.
That is pure operational efficiency.
It is. It shows that even if sales are slightly lumpy quarter to quarter, this company's just a cash-generating machine.
Yeah.
They have incredible operating leverage.
Right.
Now let's look at the quote-unquote bad news, which the market totally ignored.
The revenue.
Total revenue was $790.2 million. The street wanted $814.8 million.
So it's a 3% miss.
It's a 3% miss. However, and this is the key point, it is still up 7.4% year over year.
So it's not shrinking.
Not at all. It's just growing slightly slower than the absolute most optimistic models predicted for this specific 3-month window.
Got it. And if we zoom out to the full year 2025 context, the story looks even better. You really have to look at the annual trend line with these guys.
You do.
Because total revenue crossed the $3 billion mark for the first time in company history.
A huge milestone.
They hit $3.18 billion, which is up 11% year over year. And net income, a massive $1.33 billion.
Yeah.
I mean, for a biotech company to be clearing over $1 billion in net income is rare air.
Extremely rare.
Usually in this space, you have growth without profits, or you have profits but no growth.
Right. You're either burning cash to fund trials, or you're a legacy pharma company just paying a dividend while your patents expire.
Exactly. UTHR is doing both.
It puts them in a very exclusive club. And I think that's exactly why the stock popped 13%. The market is pricing in the quality of these earnings.
Quality over top-line volume.
Exactly. This isn't a company burning cash hoping for a drug approval in 2030 just to survive. This is a company printing cash today while funding a pipeline that rivals a speculative startup.
Yeah.
And the engine here, the thing driving all of this cash flow, is the Tyvaso ecosystem.
Right, their flagship.
Total Tyvaso revenue was $464.3 million for the quarter, up 12%.
It's a solid number.
It is. But the real star, the specific product that every analyst is watching like a hawk, is the Tyvaso DPI.
The dry powder inhaler.
Yes. That specific product grew 24% to $338.6 million.
That DPI number is the critical metric because it proves that patients are actually making the switch from the older, clunky nebulizers to the much more convenient dry powder format.
It completely validates their commercial strategy.
It does. But let's unpack why the total revenue missed slightly anyway. Because management spent some real time on this on the call, and it is important for understanding their commercial mode.
Right.
If you don't understand the seasonality of this business, you might misinterpret the underlying health of it.
So this brings us to our first real deep dive segment today, the commercial mode and competitive defense.
Let's get into it.
Management was very clear about what they call the durable double-digit narrative. They reiterated their commitment to that revenue growth target.
So no step back in confidence.
None at all. But they did have to explain the Q4 lightness. And it comes down to a phenomenon that is unique to the U.S. healthcare system.
The famous donut hole.
Exactly, the donut hole and insurance deductibles resetting. Management reminded investors that Q1 and Q4 are historically always the lighter quarters for them.
Why is that exactly?
It's due to distributor ordering patterns.
Yep.
Think about how health insurance works in America in January.
Deductibles go back to zero.
Right. Patient deductibles reset on January 1st. So suddenly, a specialty drug that was basically free for the patient in November and December now costs that patient $2,000 out of pocket in January until they hit their new deductible.
Which causes a massive delay.
A huge delay. Insurance paperwork gets bogged down. Reauthorizations from the doctors are suddenly needed.
And the specialty distributors know this is coming every year.
Correct. The distributors anticipate this exact slowdown. So what do? They draw down their existing inventory heavily in Q4 to avoid sitting on expensive stock that they know won't move fast in January.
That makes perfect logistical sense.
It does. Then you add in the holiday slowdowns in late Q4 where doctors literally aren't in the office to write new prescriptions anyway.
Right. Everyone is on vacation.
Yeah. The heavy ordering always happens in Q2 and Q3 when the paperwork clears, everyone is authorized, and the deductibles are fully met for the year.
So the signal management sent was basically, don't panic about a visually light Q4.
Exactly. Sequential growth is expected to return strongly by Q2 2026.
And honestly, if you have followed this stock for any amount of time, you already know this pattern. It is a feature of the specialty pharma business, not a bug.
Right.
It happens every single year. But what about the competition? Because the entire bear case on UTHR for the last 2 years has been Liquidia.
Liquidia, yes.
Everyone has been terrified about Liquidia's rival drug, Yutrepia, coming in and just stealing massive market share. It's been this dark cloud hanging over the UTHR stock price.
It really has.
What was the tone from management regarding that specific threat?
Dismissive.
Really?
Highly confident, honestly almost borderline arrogant, but it was backed by very hard data.
Okay, what data?
Management discussed the competitive landscape regarding Liquidia at length, and they essentially said the threat is evaporating. They cited internal data showing that new patient referrals for Tyvaso are currently at the highest level in 2 years.
Wait, highest in 2 years as of when?
As of mid-February 2026, so right now.
That is a very strong leading indicator. If referrals from pulmonologists are up today, actual booked sales are going to be up next quarter. That is just basic math.
Precisely. Referrals today equal revenue tomorrow. And they made a really interesting qualitative point about the belief in the competitor's product.
What do you mean by belief?
Well, management stated that belief in the competitor's claims about giving patients higher dosing flexibility or causing less cough, is waning among doctors.
So the marketing isn't working anymore.
They are saying that the real-world experience in the clinics isn't matching the marketing hype from the competitor. You have to remember, doctors are naturally conservative.
Right.
If they try a new drug on a patient and it doesn't deliver a massively better experience right away, they just go back to the gold standard they trust. And Tyvaso is the gold standard in pulmonary hypertension.
So the narrative here is that the logjam of new patient starts that we saw in January, which they also attributed partly to severe winter weather across the country, keeping patients home, that logjam broke wide open in February.
It broke, and the commercial engine is visibly reaccelerating.
But they aren't just playing defense with rhetoric and sales reps. They're playing defense with actual hardware innovation.
Yes, they are.
Let's talk about the platform innovation, specifically this 80 millisitogram unlock.
The 80 microgram cartridge.
Right. It sounds super technical to a layman, but why is this such a big deal commercially?
It sounds minor on paper, right? Oh, a new cartridge size. But it is actually a brilliant strategic block against the competition.
How so?
They introduced these new 80 microgram cartridges for the Tyvaso DPI. To understand why this matters, you have to understand the daily patient burden. Previously, if you were a patient who needed a high dose of this medication to manage your lung pressure, you needed a lot of physical drug, you had to load multiple smaller cartridges into the inhaler device.
So you inhale, take it apart, switch the cartridge, put it back together, inhale again.
Exactly. It's constant friction.
It makes the treatment feel like a real chore.
It does. The new 80 milligram cartridge allows those patients to take the equivalent of 15 old nebulized breaths in a single DPI breath.
Just think about that efficiency for a second.
It's life-changing for the patient.
Wow. That is a massive quality of life improvement. You literally go from a tedious medical procedure to a 2-second moment in your day.
Huge difference. Imagine sitting there on your couch for 20 minutes with a loud, vibrating nebulizer machine plugged into the wall versus taking one quick breath from a little pocket-sized dry powder inhaler while you're out walking the dog.
Night and day.
They also introduced 96 and 112 millisgrad combo kits to go with it.
So higher doses are even easier.
The strategic implication here is that they are securely locking in the high-dose patients. And financially, these are the most valuable patients to the company because they consume the most drug volume.
Right.
By making it wildly more convenient for them to stay on Tyvaso, UTHR makes it so much harder for Liquidia to come in and try to steal share based on offering better dosing flexibility.
They're effectively closing the one door that the competitor was trying to pry open.
Exactly. They are saying to the market, we can do high doses way better than you can, so don't even try.
Okay, so that is the defense. That is the moat protecting the current revenue.
Right.
That explains why the current business is safe and growing. But yesterday's call wasn't just about defending the castle.
It was about expanding the empire.
And this brings us to segment 2, the Skunk Works unveiling.
This was my favorite part.
This, to me, was the pure alpha of the call. This is what completely caught the market off guard and sent the stock flying.
This was the exact moment where the scripts flipped from steady, reliable grinder stock to absolute growth rocket.
Walk us through it.
Martin Rothblatt, the CEO, officially unsheathed. And again, that was her specific word choice. A brand new product that had previously been kept entirely in stealth mode.
Total secret?
It's called Trezmy.
Trezmy. Let's spell that out so everyone listening gets that name. Trezmy.
Right.
What exactly is it?
It is a treprostinil soft mist inhaler. SMI for short.
Okay, a soft mist.
Now, to understand why this is a true category killer, you have to understand the #1 complaint patients have about dry powder inhalers.
It's not the efficacy, right? The drug itself works.
The drug works beautifully. The problem is the cough. You are inhaling a microfine powder directly deep into your lungs. It naturally irritates the airway. It triggers a physiological reflex. It causes coughing fits.
Which makes sense.
It is the main reason patients discontinue the therapy early or flat out refuse to titrate up to the higher, more effective doses.
Right. It's incredibly effective medicine, but it's a harsh delivery mechanism. It's like taking a shot of really strong whiskey when you already have a sore throat.
That is a great analogy. It burns going down. Trezmy solves that problem completely.
How?
It uses a soft mist technology. It's a gentle liquid cloud, not a dry powder. So it enters the lungs much, much more gently.
And what's the data look like on that?
The claim from management on the call was staggering.
Yeah.
They said Trezmy reduces coughing by up to 90% in their human studies compared to the dry powder.
90%?
90%.
That is game over for the competition. That is not some incremental 10% improvement you tweak your marketing for. That is a hard solve of the fundamental problem.
It's virtually eliminating the main side effect. Think about the market dynamics. If you can offer the exact same efficacy as the dry powder, but with 90% less coughing, you instantly capture the entire segment of the market that couldn't tolerate the powder.
Right.
You basically cannibalize your own DPI product, sure, but you also completely wall off the market from anyone else trying to sell a powder.
Because no doctor is going to prescribe a powder that causes severe coughing when a gentle mist that does the exact same thing is sitting right there on the pharmacy shelf.
Exactly. And the timeline for this isn't some concept car they hope to build in a decade.
When is it coming?
They're filing for FDA approval this year, in 2026.
Wow.
And they are planning on launching it commercially next year, 2027.
That is incredibly fast. That is a defensive moat widener of the absolutely highest order. It basically resets the clock on any competitor trying to build a better powder.
By the time the competition finally catches up to the powder technology, UTHR has already moved the entire market over to the mist.
Checkmate. But Trezmy wasn't the only bomb they dropped on this call.
Not even close.
They also talked extensively about this superprostacyclin. And this is where the timeline gets very tight for traders, because we are talking about actual clinical data coming out next week.
Yes. This is the ADVANCE OUTCOMES study.
Okay.
The unblinding for this trial is happening next week. We are recording this deep dive on Thursday. This data could realistically drop on Monday or Tuesday morning.
So any day now.
The science here is about a superprostacyclin. It's an oral drug called ralinpag.
Ralinpag.
Right. It binds much more efficiently to the receptors in the body, and it lasts significantly longer in the bloodstream than older versions.
And the holy grail here is the dosing frequency, right? Because right now, oral therapies for PAH are a massive hassle for the patient.
Correct. Currently, many of these oral prostacyclin analogs have to be taken multiple times a day. 2, sometimes 3 times.
Which is hard to remember to do.
And you have to constantly manage the peaks and troughs of the drug levels in your blood. You feel great after you take it, then you feel terrible before your next dose.
A roller coaster.
This superprostacyclin promises true once daily treatment, 1 pill a day, a perfectly steady state of the drug in your system.
That is the absolute gold standard for convenience in any chronic medication.
It is. And Martin Rothblatt was incredibly confident about this readout. She literally said, "We are optimistic this will usher in a new era."
A new era.
You do not usually hear experienced biotech CEOs use phrases like new era just a few days before a blinded data drop, unless they are feeling very, very good about what they're seeing internally or what their predictive models are telling them.
Right, because if the data was shaky, you'd hear the usual safe lawyer speak.
Exactly. You'd hear phrases like, "We remain cautiously optimistic," or "We look forward to analyzing the results with the agency."
But saying new era is a highly distinct choice of words.
It's planting a flag.
And that leads us to the third piece of this clinical puzzle, the IPF play.
Idiopathic pulmonary fibrosis.
Right. They have a study running called TETON-1. When do we see the data for that?
That unblinding is scheduled for next month.
So look at this cadence.
It's crazy. Superprostacyclin next week and TETON-1 next month.
Just back-to-back major catalysts.
And TETON-1 is basically testing Tyvaso in IPF patients. Now remember, they already had positive results from a sister trial called TETON-2. Management expects TETON-1 to also be positive because the baseline characteristics of the patients enrolled are practically identical to the successful trial.
That makes sense.
And the quote that really stood out to me from the call was Rothblatt saying, "This drug is better than any other IPF drug the FDA has ever approved."
That is an incredibly bold statement to make publicly.
Very bold.
Because the IPF market is famously a graveyard of failed drugs. It is a notoriously difficult, fatal lung disease to treat. To stand up and say you have something better than anything ever approved, that is confidence bordering on absolute bravado.
It is. And it beautifully sets up this broader narrative of what they are calling the 2027 triple launch.
Which is what long-term investors need to focus on.
If you are a long-term holder, this is the entire vision for your capital.
Let's break that down then. Segment 3, the 2027 triple launch. What exactly does 2027 look like for this company if everything hits? Paint the picture for us.
It looks like a paradigm-shattering year.
Their words again?
Their words. You basically have three massive thrusters firing all at once for revenue growth.
Okay, list them out.
Thruster 1. The once-daily super-prostacyclin for pulmonary hypertension.
Huge.
Thruster 2. The coughless Trezmy soft mist inhaler for PH and interstitial lung disease.
Also huge.
And Thruster 3. The Tyvaso expansion into the IPF market.
Wow.
Any single one of these would be a major stock-moving event for a normal biotech company. UTHR is actively planning to launch all three of them in the exact same 12-month window.
And the management commentary around this, I mean, Rothblatt literally said on the call, hell yeah, we are pumped.
Hell yeah. You just don't get that on a Pfizer earnings call.
No, you do not.
You don't get that kind of raw emotion from the blue chip pharma guys.
It really drives home the point that this is not some boring, slow growth utility stock. This is a massive growth rocket disguised as a mature value stock.
Exactly.
And speaking of value, they actually put a hard number on it. They reaffirmed their $4 billion revenue target.
They did.
But I feel like there is some serious nuance there that we need to clarify.
A ton of nuance. They reaffirmed a quote-unquote soft outlook of reaching a $4 billion annualized revenue run rate by the end of 2027.
Okay.
But here is the crucial detail that I think some of the trading algorithms might have missed yesterday, but the human traders definitely caught.
What's that?
That $4 billion target does not include the upside from the three new launches we just talked about.
Great. Unpack that for a second. So the $4 billion is just the current business growing naturally?
Yes.
Just the stuff they are already selling today?
Exactly. The $4 billion run rate is their base case scenario with the current existing portfolio. Tyvaso DPI, Remodulin, the older drugs,
Okay.
the super-prostacyclin, Trezmy, and the IPF expansion management explicitly call those additive to the target. They literally use the terms whipped cream and gravy.
Whipped cream and gravy.
Yes. So if those three launches hit, the revenue number in 2027 isn't $4 billion, it is significantly higher. We could easily be looking at a $5 billion or even $6 billion run rate company.
That is a massive disconnect between their stated guidance and the potential reality.
It's classic sandbagging.
Under promise, over deliver.
Right.
And they also mentioned something else on the call that I think explains their extreme confidence in these upcoming trial results. The AI-enabled digital lung model.
Oh, this is fascinating tech.
We hear AI buzzed about everywhere right now. Every single company from Wendy's to Microsoft has an AI strategy.
Right.
But how is UTHR actually using it? Is it real or is it just investor bait?
It is very real. They claim they can use this digital lung model to run hundreds of dates in silico phase 3 trials before they ever spend a single dime on a real-world trial.
In silico, meaning inside the computer.
Right. Essentially, they are simulating the entire trial outcome computationally. They feed in the real patient baseline data, the drug pharmacokinetics, the complex disease progression models, and they just run the clinical trial in the computer over and over again.
So they basically know the answer before they even take the test?
Precisely. It massively de-risks the clinical trial process. That's exactly why they are so vocally confident about TETON-1 matching TETON-2 next month. They've likely already run the digital simulation 1,000 times.
That is an incredible advantage.
It de-risks the pipeline in a way that traditional biotech simply can't match. Most biotech investing is a blind coin flip. UTHR is playing with mathematically weighted dice.
It's like playing the game with cheat codes enabled.
It really is.
Okay, so that is the near-term and the medium-term pipeline. But UTHR has always had this sort of mad scientist vibe to it, specifically regarding their organ manufacturing division.
The moonshots.
This is the stuff that sounds like pure science fiction. Let's touch on segment 4, the Moonshot Factory. What is the latest update on the manufactured organs?
So this is the long-term call option embedded in the stock price. You buy UTHR today for the PAH monopoly and the massive cash flow, but you hold it for the next decade for the potential to literally manufacture human organs in a lab.
Hooray.
The update on xenotransplantation, that's the genetically modified pig-to-human organ transplant program, was very concrete yesterday.
What did they say?
They currently have 2 human patients who have been transplanted and are doing well in their FDA-approved phase 1 trial.
Just pause on that for a second. 2 human beings are walking around right now with genetically modified pig organs functioning inside their bodies, living their lives.
Correct. The biology works. It is proven. Now it is just an engineering and regulatory scaling problem.
Wow.
They expect the full initial cohort of 6 patients to be fully enrolled by summer 2026.
Okay, so soon.
And if that data looks good, they're aggressively targeting a commercial goal of having a xeno kidney product on the market, ready to order by 2030.
2030 is not that far away. That's basically 4 years from now.
It's really not. And think about the total addressable market size here. The national waiting list for kidneys is effectively infinite relative to the current supply from human donors.
It's a tragedy, really.
It is. If you can manufacture a functioning kidney at scale, you have a product with truly unlimited demand.
That is a $1 trillion market cap idea.
And then on the other side of the house, they have the manufactured livers with their Miromatrix acquisition.
Right.
They just completed the first ever manufactured liver clinical trial, and they're expecting formal FDA guidance later this year on the exact regulatory path to approval.
So, again, this isn't sci-fi anymore.
No, it's actual clinical development. It is moving from the academic lab bench straight to the hospital bedside.
It's incredible. It really changes the fundamental definition of what a biotech company even is. They are becoming more of a biologistics and manufacturing company.
Exactly.
So let's pivot to the broader investor context. Why did the stock move 13% yesterday specifically? We touched on the earnings beat, but let's look at the sector comparison. Why did capital flow into this name so violently?
It is a clear rotation into quality. Look at the broader market right now. The S&P 500 has been basically flat to maybe slightly up over the last month, up maybe 0.5%.
Just churning sideways.
Right. But UTHR ripped 13% in a single day. It is vastly outperforming the XBI, the main biotech ETF, on a relative basis, specifically because of these immediate catalysts.
Investors are waking up.
Investors are realizing that UTHR is a completely unique beast. It prints cash again, $1.33 billion in net income, while having a pipeline that rivals the most speculative, high-growth, cash-burning startup names.
Right. Usually you get one or the other. You get the profitable, boring legacy company paying a 4% yield, or you get the unprofitable, highly exciting company with zero revenue.
UTHR is both. It is a rare hybrid.
And investors are aggressively front-running the news. That is the key behavioral takeaway here. They are buying the stock today before the trial news drops next week.
Exactly. Smart money moves first. They don't want to be caught chasing the gap up on Monday morning.
Let's look at that catalyst map again, because this is what really matters for anyone trading this over the next 30 days. If you are actively trading this, you need to write this timeline down.
Let's do it. Next week. ADVANCE OUTCOMES unblinding for the superprostacyclin. Okay. If that data is clean and positive, the stock likely re-rates significantly higher because it completely secures the long-term PAH franchise from generic threat.
Right. It protects the golden goose.
Then next month, TETON-1 unblinding for IPF.
Yeah, okay.
That's another massive re-rate opportunity because it proves Tyvaso works in a totally new disease, opening up a massive new TAM.
Total addressable market.
Right. Then mid-year, full enrollment of the xeno-organ cohort.
Moonshot update.
And year-end, the formal FDA filing for Trezmy, the coughless inhaler.
It is just a constant drumbeat of major news. There is literally no dead air for the shorts to hide in.
None. It's relentless execution.
Okay, so we have the fundamental thesis. We have the upcoming catalysts. We have the downside risk mitigation through their cash flow.
The table is set.
Now it's time for everyone's favorite segment. But please remember, before we get into this, we are just two voices doing a deep dive. We are absolutely not your financial advisor.
We are not.
Do not go out and do what we say blindly. This is strictly for entertainment and hedge fund simulation purposes only.
Strictly a simulation. Don't lose your house on a biotech binary event.
Yeah.
Don't blame us if the FDA suddenly says no.
Exactly. So here is the pitch. We are calling this trade structure the coughless call spread. Or, if you're feeling fancy, the Triple Crown straddle. Walk us through the financial logic.
Okay, imagine you are pitching this idea to a hedge fund investment committee this morning. The logic is brilliantly simple. Management just told us on a public call that they have a category killer in Trezmy and a superprostacyclin trial unblinding in a few days.
Right.
Now the stock is up 13% already, which frankly scares some retail people off. They see a double-digit green day and think they missed the entire move. They think it's overbought.
Right. They think the trade is crowded now.
But if the clinical data next week is actually good, that 13% is just the warm-up act. It's just the initial pricing adjustment to the new reality.
That 13% is just the ante to even sit at the table for the real move.
Exactly. So the trade structure is this. You go out and buy long, deep, out-of-the-money call options for January 2027.
You are buying a lot of time value.
You are buying time. You are betting on the super cycle materializing.
But why January 2027 specifically? Why not buy the March expiration just to play next week's catalyst?
because by January 2027, the market will have fully digested the reality of the triple launch. The super-prostacyclin data will be fully published and peer-reviewed. The TETON-1 IPF data will be out. The Trezmy FDA filing will be completed and accepted.
So all the risk is removed by then.
Right. If the super-prostacyclin actually allows true once-daily dosing and Trezmy completely eliminates the cough, UTHR effectively creates an unbreakable monopoly on the daily patient experience.
They own the patient.
Competitors like Liquidia are basically out there fighting a war with weapons from 2024. UTHR is actively deploying 2027 technology.
It's an unfair fight.
So we are betting with these 2027 calls that the $4 billion revenue run rate currently modeled by the conservative analysts gets aggressively revised to a $6 billion run rate once the street is forced to actually model in the triple launch. Trezmy plus super-prostacyclin plus the IPF market.
So you're basically front-running the major analyst upgrades that haven't happened yet because the analysts are waiting for the actual trial data to drop.
Exactly.
You are acting today before the Goldman Sachs and Morgan Stanleys of the world are forced to change their price targets next Wednesday.
Precisely. You are placing a bet that the Wall Street analysts are currently too conservative and that Martin Rothblatt's digital lung model is right. You are betting on the AI cheat codes.
I love the asymmetry of that. But what is the actual risk? What is the hedge here? Because we always have to look at the downside of the trade.
The risk is starkly binary, as it always is in biotech. If the unblinding next week outright fails, if the super-prostacyclin isn't actually super, or if TETON-1 somehow fails despite TETON-2 working.
What happens to the stock?
The stock immediately fills the gap down. It probably drops 15 to 20% overnight to fill that massive gap from yesterday's 13% rip, and it just returns to its previous trading range.
So you lose the premium on those calls.
You do. But based on the CEO's extreme confidence that hell yeah comment on a recorded call and the predictive digital modeling they use, the risk-reward ratio skews heavily to the upside here. It is a highly asymmetric bet on proven innovation.
Honestly, hell yeah is a fundamental technical indicator in my book. When a seasoned CEO drops that on a Q4 earnings call, you sit up and listen.
It really should be programmed into the algorithmic trading triggers at this point.
All right, let's wrap this up. Give us the quick recap for the listeners who maybe joined the stream late or zoned out during the science talk.
Fair enough. EPS was a massive beat, showing incredible operational efficiency. Revenue was a slight miss, but completely ignored by the market because of the high quality of the earnings and the understood Q1, Q4 seasonality.
Right.
Stock closed up 13% on heavy volume. The future of the company is Trezmy, the soft mist inhaler, and the super-prostacyclin.
And next week?
And next week is the fireworks show with the ADVANCE OUTCOMES data readout.
Keep your eyes glued to the ticker, folks. We will be watching very closely to see if that AI digital lung actually knew what it was talking about.
It's going to be a fun week.
We'll see you next week with the results. Talk tickers. Signing off.
Signing off.